Well, I want to thank you so much for joining us. This is one of our HFA webinars that we enjoy so much because we cover some great subject matter, and not just for this hour, but it's something that'll be on demand when we're done. We're going to talk about that a few times during this broadcast, but myhfa.org/webinar, you can find an entire catalog of some tremendous information to help you with your business. Today is no different, by the way. I have to kind of laugh when I saw the headline, Demand Planning, Forecasting Optimal Inventory Levels. Man, you want to talk about one of the biggest challenges and headaches for every retail member we have. This is it. So I'm sure we got people's attention. But I wanted to remind you about a couple things, just a little bit of housekeeping here. There's a box to the right of your screen that allows you to go down to a little chat box. If you want to add a question for us to get to, please send that. We will do our best to get that on during the broadcast here. We also did get all the questions that those of you who signed up gave us in advance. That's number one. And of course, I also already mentioned about myhfa.org/webinar. When this is done, you'll be able to suggest to people to go check it out and to view it on demand at any point. But let's get down to it here. I want to go ahead and introduce our guests, and we are spanning some time zones. We were talking about that before we came on live here. We have Damon Farigo from CS Woe & Sons, yes, in Hawaii. You win, Damien. Best location of anybody sitting on this thing like this, the ocean breezes. He's the corporate operations manager for CS Woe & Sons. We're happy to have you here, Damien. We appreciate that. Carson Rao is also joining us. He's the owner of Home Trends. He is in Nebraska, so he is Central Time right now, so we appreciate that. Thank you, Carson, for being here as well. And Jonathan Schulman's joining us. He's a rep. He's the president currently of IFRA, which, if you're not familiar, IFRA is the association for reps, and it just makes sense that somebody who's constantly balancing between manufacturer and retailer would be great to have his voice here. So Jonathan, we're happy to have you here as well. So thank you for that. I appreciate it. So you know, I'm trying to think about where to start here in this conversation. There's a million places to do it, but let me just ask you all this. You know, we have seen in the last 2 years, it's been feast and famine in different aspects, right? You know, the supply chain shut things down, and there was a lot of flow stopped when it came to inventory. Then we had a lot of our retailers, if not all of them, just getting what they could and having higher inventory levels than they did pre-COVID. And now as supply chain's catching up, we're sort of, you know, now there's sort of this mix. I mean, this has been a moving target the whole time. Damien, how challenging has this really been to plan? And that's the key thing that's in our title today, is demand planning. How tough has it been to plan when it's, you know, sort of all the rules have changed in the last 2 years from month to month?
Yeah, that's certainly been the challenge for the last couple of years. You know, for us, we're a stocking retailer. We stock a fair amount of merchandise in general, and you know, given the logistics of getting products to Hawaii, we try to do our best to forecast things out and plan ahead of time. But one of the things that we saw, and I'm sure everyone saw this happening over the last couple of years, was, you know, we'd place orders with vendors and try to space them out 3 months out, 6 months out, 9 months out, so we would kind of have a nice flow of product coming in. And what would happen is that, you know, nothing would come for 9 months, and then all of it would come at 10 months, right? So as much as we try to kind of, you know, forecast and plan, when the lead times are shifting every day and, you know, things are so dynamic, it certainly made it really challenging to keep the flow of product that we wanted. So like you were saying, it's kind of been feast and famine, depending on the vendor. You know, some vendors were quicker to kind of deal with the supply chain issues and get caught up, and others just got really slammed and they're still not caught up. So, you know, reading between all of that across vendors has been challenging as well, because it's not the same for every vendor.
God, and you know, there's some stuff in there. I'm taking some notes here because there's things that we're going to unpack a little bit further, what you just said, and I really appreciate that, particularly with vendor to vendor situations. Carson, let me ask you this. Is planning even a little bit too optimistic at this point? Or, I mean, what have you found has been some of the ways that you've been able to sort of manage around these issues?
Well, yeah, I'm glad Damien started off that way, because, you know, we're dealing with challenges that are completely unprecedented. It's not a matter of whatever the lead time is, even if it's a year, if you can predict it and count on it, then you can strategize around it. But when it's completely unpredictable, something that you think is going to ship in a month and it takes a year, and something that you think is going to ship in a year might take a couple months. So yeah, it's been a really unpredictable challenge. And we have certainly very early on tried to adjust our strategy. We come from the opposite side of the equation. We've been a just-in-time retailer for 15 years, carrying our ideal was to carry zero stock of anything, but we relied on those global supply chains to deliver that. And obviously the idea of just-in-time is completely broken across all industries, frankly. So we've tried to deploy several different strategies, but I think where I've settled into a comfort spot for us is, much like investing, I don't want to overreact to the current situation or overreact to the economic forecast. We're going to try to stick as close to our model as possible while making some minor adjustments, but the overall theme of our strategy is going to remain as close to the original as possible.
Okay, and we're gonna just so everybody knows, we're gonna unwrap this as we go through this hour today. A lot more of that, but thank you for that. Jonathan, let me ask you a question. So one of the things that Damien brought up, and I want to have this as our starting point. I don't think the relationships with vendors and suppliers has ever been more important than it has been through this process. You're kind of been one of those stuck in the middle of this. So let's start there. How do you suggest that retailers manage their vendors at this point when it comes to this whole concept of trying to plan their inventory levels and keeping things steady?
It's tough. It's communication, really. I think the retailers have to do a really good job demanding their expectations of us, and I think we got to do a really good job being accountable to them. We know what's going to happen, but there's so many moving parts on our end of it as well that it's really difficult to dot all the I's and cross all the T's when everybody's in a, in kind of crisis mode, sorry. And so things do get lost, and that's where you can really use reps that are really going to kind of get in there and mix it up with, we're the conduit, so we're going to mix it up with our bosses. We're going to go back and deliver the information we need to our customers and be accountable to both sides. And frankly, at this point, I think the reps have always been kind of looked at as these are kind of the go-between guys, but right now it's when the good ones are really proving their worth.
I want to just mention something real quick here, if we could. This is kind of doing this on the fly here, but I'm not sure one of us, and I think it may be either Damien or Carson, since you guys don't have earpieces on, we are getting a ton of feedback from a speaker that's out next to your microphone. So I'm wondering if there's a way you can either maybe go to earpieces to see if that's the case. And there you go. It just stopped. So whatever you do, there you go. Okay. Thanks, Damien. He's gonna let me get his ears back on here, and I appreciate that. Let's see. Give him a second there. Hey, listen. Everybody else is gonna watch this tape. This is live right now, so this is what happens. We just want to make sure everybody can hear. Okay. But I want to make sure he's got his on so that he can hear the next question here. Can you hear me okay? Oh, you can. Good. All right. Thank you for that. But that did fix the problem. So thank you. All right. So let me ask you this. There's a bunch of questions that have come in. Let's just ask this, and I'll start, Carson, with you just real quick here. So while you said you're trying to say to your business model, what is working? I mean, we want takeaways for the people watching this. What is working when you have those difficult timing pieces or anything to surmount? What are some of the things that you have found have worked?
Well, when the standard answer gets taken away, you have to analyze what the solutions are. Some of it, I think, are the things that most people have done, which is try to find the product that is shipping. But then a lot of this comes back to the store level and the conversations that we're having with customers, and that is what are the featured products? What are the things we want to make sure all the customer eyeballs go to? And so whatever that product is that we can get, are we building our sales process around highlighting that, number one? And number two, are we really doing a great job of having a quality conversation with the customer and really trying to find out who is it that has to know now, who is it that has to have it now, and from a priority level, is that more important than getting the perfect piece, or the picture that they had in their mind. And too often, I think we treat all customers with the same, we paint all customers with the same brush, where we think that everybody's got to have it, or the suppliers can't get it, or whatever. And I think it's really much more nuanced in terms of asking the customer, when do you have to have it? Here are the solutions, and which one is more important? The fact that we have to have it by Memorial Day, or the fact that we want you for the next decade to have the piece of your dreams sitting in your home, and maybe that's worth missing this Memorial Day to have a great next 9.
So interesting. So your first step toward demand planning is really letting the customer drive it. But, and Damien, I'll let you pick up on this, but what I'm hearing is this whole push in recent months about in stock, in stock, in stock. The one way to make sure that you can deliver it is if you have it already. So can you talk a little bit about that as well? What are the things that you're seeing works when you're put in kind of a pinch, with a timing issue, or just the piece that's not in stock? Oops, and we don't hear you.
No.
There you go.
Yeah, that's a really good question. Because of the way that our logistics work, and I'm sure this is the case for others, there are certain products that we try to always have in stock, and then there's others that we're kind of a little bit more okay not having in stock. So for us, that's kind of the starting point, is identifying across our lineup what are the ones that we want to try to always have in stock. Now, granted, over the last couple of years, that was extremely challenging, because those tend to be the most popular items, which tend to be from the most popular vendors, and they got slammed over the last couple of years, right? So it was extremely challenging to do that. For us, I guess, digging kind of a level deeper and getting at your question, we do sell against incoming POs. So, our salespeople are pretty good at looking at what's coming in, in the next several months. And if a certain salesperson has a customer that they know is waiting for, their new home to close 4 months from now, they might contact someone that's, down the list of incoming POs from them and say, hey, you can take this item from me and I'll swap with you. So I'll go to your PO, which is 4 months out, but you can have mine that's coming in 3 weeks from now, so that you can get it to your customer who really needs it. So I think a big part of it for us is really driving communication across our stores and across our teams, so that we can kind of like horse trade inventory when it's not in stock, right? So that we can kind of optimize getting the right piece to the right person at the right time. I wish we had a way to automatically do that, but at this point, we're kind of dependent on the human communication and teamwork, basically, to get that done.
Isn't it interesting that in the first few minutes of this conversation, this subject about forecasting inventory, that we've gone out to the sales floor, and that's where you both started. And I think that when everything was just coming in when you wanted it, and you could get it in short order, that was never an issue. But now I love the fact that you're saying, great suggestion to any retailer is, if your planning doesn't start on the sales floor first and not communicating well, whether it's understanding the customer's need, pointing them towards something in stock, or in Damien's point, which I think is phenomenal, that you got a team that's willing to sit there and look at the POs and what's coming in and really manage that. I think that's fantastic. Jonathan, what are some of the things that you're seeing from the folks that you're dealing with that really help that maybe are those new, kind of a new approach here that others might be able to emulate?
I think the guys that are really doing it well right now are really taking an active look at it. Technology will only get you so far, but I think these times, especially when we're in the midst of another kind of black swan event, is it leaning into these constraints that we have, going from there's no such thing as a bad seller on the floor to, where is everybody and what are we going to do with all this stuff? I was walking a warehouse not long ago, and man, I mean, it was just stuffed to the gills with stuff, right? So what these guys are talking about, years worth of orders coming in within, the same 10 weeks of each other, it's got to be pretty scary. I'm a big believer that sales cures all woes, right? And if you've got too much stuff to sell, we all would have traded pretty much anything we had business-wise for that 9 months ago. So, somewhere along the line, somebody at a retail store has got to get up and do something. And I know, because I go into a lot of them, and I was one of them as well, where sometimes you'll walk into a store and salespeople will be somewhat disengaged and on their phone or doing something else, or not really going for customers and having kind of a process of how we're going to greet them. Look, I think that there's no perfect sofa, there is no perfect bedroom set. Customer comes in, they're looking for someone that they trust to sell to them in a store that they trust that's going to stand behind it, right? And so the thing that the person can do in the store to not only get a transaction, because that's kind of boring, but to create a relationship, to create something that's going to persevere over the long term and maybe even multi-generations, is kind of what it is that we're looking for. And someone comes in for that recliner or what have you that you advertised to get them in, don't just sell them that. Have a reason to be there, add something on, do something, get them going. And if you're a really good salesperson and a professional, you'll know exactly what's in stock and what can get delivered. And if you can do a really good job with the customer and provide an experience that's better than what they're getting someplace else, you're going to get that customer and you're going to get them for life, and the tickets are going to be bigger. It's just sort of a proven fact. The other thing is, lean into that 80-20 rule. There's a Pareto rule that says that 20% of your product is going to give you 80% of your business, and I think that's dead on the money, right? So cultivate those things. Take that 20% of the product, talk to your salespeople, and let them kind of take some ownership in what's coming in. Instead of looking at a report and going, okay, this is in, I need to sell this. Take those guys that are responsible, that you trust, that have been there, for a while. Get the managers involved and give them some skin in the game, and make them vouch for it. Hey, I brought this in. Let's figure out a way to promote this stuff and sell it so everybody is happy. And I think if we can do those things and create that experience, we'll see our inventories level dwindle. We'll be a little bit sharper in what it is that we're buying, and we can kind of manage these highs and lows, because the one thing we know is these stress tests happen, but there's going to come a time where we're going to be back 9 months ago, and we're going to have a ton of people looking for things that we just don't have, or we don't know what to have. And by keeping your kind of finger on that button, you'll know.
And some great points there, and I really, really appreciate that. We've had a number of questions related to to the whole issue of lead times. And Carson, let me ask you this: is it getting better? We know that we hear the supply chain is improving. Is it getting better when it comes to forecasting lead times and inventory, or are you still seeing it being pretty similar to what it was, let's say, 6 months ago or 8 months ago?
No, I would say, yeah, it's significantly better than it was 6 months ago. It's still very spotty though. And what I mean by that is certain products, certain groups are shipping much better, much more consistently, much more predictably, and then others are still in a similar situation. But if you count up the number of sets that you're ordering and say which ones are we in a little bit more predictable cycle, I would say it's 50 to 100% more than it was 4 to 6 months ago. So definitely moving in the right direction. And then Mark, I wanted to add on, I wasn't trying to dodge your last question, but that really is how we approach things, especially when, regardless of what the tool is, you can't trust the data. So for example, we use NetSuite. We went through and looked at their demand planning and supply planning. We developed several different models over the last year and a half, and we ran them simultaneously, side by side, using historical data, and looked at the results. And from seasonal to rolling average to linear regression, they were all over the place, and I wouldn't use any of them just based on my intuition and my history in this business. And so I was really, kind of caught in a catch-22. And so, right now what we're working on is a tool that looks at the items. It looks at the customer request date that we plug in at the time of sale. It looks at the ATP, or expected date, of that product, which is less trustworthy than we're used to in our entire history. And it considers all three of those factors, and then it splits the purchase orders off based on, again, primarily that request date balanced with the ATP date. So that's the real answer as to what we're doing. I can't stand here and say that it's made an impact yet, or that it's even a usable tool at this point, but after several iterations of trying to find a new game to play, this is where we think we're headed now.
And let me, I just want to clarify one thing, but you're saying that a lot of that data that you're utilizing is already is organic. You already have that. So this is not that you're going outside looking for some empirical data from the industry. You're just, this is flat out your data, your numbers, because you don't trust what you're hearing from the outside.
Correct. So for example, on a given item, we'll have two dates that we look at. One is the factored lead time that our system calculates based on historical data. And the second one is we have ATP data from our manufacturers uploaded to our system every day through EDI, and we're comparing those two dates. Okay, so that's kind of the expected incoming date. Oftentimes those two are dramatically different, however, and I really frankly don't trust either one of the two numbers. So, but it's another data point. And then we balance that with customer request date. And then the automation essentially will split even customer purchase orders off based on those two factors. And so if we can get part of an order quicker, we'll separate that out onto a separate purchase order.
Gotcha. Damien, just some thoughts about what Carson said and how you guys might adapt to that as well, because it's an interesting way of looking at this, because a big part of this is how in creation, when we've had unprecedented 2 years, how can you forecast when these are waters that nobody's ever been in before?
Your question is about,
I mean, your thoughts about what, first of all, we just heard Carson doing as far as how they're, he's coming up with some creative ways there to really manage these lead times. How are you guys managing that? And because this is all that question about how to forecast when a lot of it is really difficult to nail down.
Yeah. On that specific point, I would say we're probably a little bit less sophisticated than what Carson's doing. A lot of it does go back to trying to communicate as much as we can with our vendors to get the best up-to-date expected lead times that we're going to have from them. We do use ATP dates and things like that to try to communicate that information as streamlined as possible to our sales team, so they have the best guess that we have at any point in time when something is going to be coming in. But with beyond the uncertainty on when vendors are going to ship certain items, there's also other variables within the supply chain that add uncertainty to whether or not we're going to hit an ATP date, right? So, for example, because of these waves and troughs of product coming in, there's been points where we had 80 containers at the port that we needed to unload that we were backlogged, and that's a lot more than we do in any given week. So that added a certain amount of time to how long it was going to take us to be able to give the product to the customer. So we've had to kind of constantly tweak and adjust certain assumptions that we have in the expected dates that we're communicating to customers by adding pad time here, adjusting pad time there, and sort of I guess our approach, or what we strive to do, is under promise and over deliver. So if a vendor is telling us that it's going to take 8 months, we're going to put probably like 10 months in the system, and then we're going to add a few extra weeks for receiving, so that ideally we'll actually have it in 9 or instead of 11 or whatever, so that we pleasantly surprise the customer instead of under delivering to them. So that's sort of the way that we've been handling it. In terms of the forecasting piece of it, in a nutshell, I think what we do is look at our historical rate of sale across any given product, any given collection, any given vendor, and then layer on top of that what we expect to happen demand-wise in the coming months, right? So if we're forecasting or expecting business to be down 10%, say 6 months from now, we're trying to bake that into our forecasts and whatnot. But there's a little bit of art to the science, I guess you could say, in the way that we're approaching it, because like Carson said, a lot of the models and linear regressions and things like that are just straight off these days. And if you because the business climate is changing so rapidly, if you go off of a 3-month moving average versus a 6-month moving average versus a 12-month moving average for your rate of sale, you're going to get totally different numbers. So it's been an adjustment of, okay, how far back are we going to look for our rate of sale? And then where do we expect that to go from here in terms of how we see the business climate changing, and then making some tweaks in our formulas based on that, basically.
Yeah, I mean, that's a fabulous point, because how in the world you can't really depend on sales trends in 20 or 21 to inform where we are now, because they're so dramatically different than any years you've seen in the past. And then Jonathan, to kind of jump in on this too, is that now we're seeing in the last few months, we're seeing demand pull back. So when we talk about trying to demand plan, we've gone from this incredible pent up demand in 20 and into 21, and a strong 21, record setting 21. So that got everybody to act a certain way, and then now this. So I mean, we're talking about real time adjustments here, because it is changing by the day almost.
Yeah. Plus, it's a fashion business too. So, what was popular a couple of years ago, especially on the upholstery side, might not be popular. Colors change, and, you want to get stuck with things that aren't going to move. Of course, beauty is in the eye of the beholder. I can remember, merchandising this horrible sofa that I got, and we're like, hey, if someone's going to spend $5.99 on it, they're going to spend $9.99 on it, because it's that, specific person. And you can highlight those things and sort of get a little bit nimble and move those things around, and purple elephant or purple cow, right? And if you make a big deal out of something that people might not think is the greatest thing, you're going to find somebody that's going to spend a lot more money. And if you can increase your margins and lower your cost of goods, then your GMROI really goes to a place where you want it to go. And that's the name of the game, right?
Absolutely. And I guess my question, Carson, let me ask you this. I sense that by your business model, this might not be the case, but just about every retailer I've talked to in the last number of months has had super high inventory levels. You said you guys have never been big on that. Is your inventory higher right now than it has been historically? First and foremost, has that changed for y'all?
It is, yeah. We're in a similar position there, but I would tell you that late last fall, we made a commitment after thinking we were going to do something else for probably the prior year. We were thinking, let's get whatever we can get our hands on.
Sure.
And last fall, it seemed very obvious to me. I'm kind of a macroeconomist at play, I guess, in my own mind, and it seemed very obvious to me there was going to be a slingshot effect. So what we're seeing right now, I think for anybody that was zoomed out at 30,000 feet, was very clearly not only going to happen, it frankly had to happen. If we're ever going to get back to normal, we have to have this overshoot to reset the supply chain. And frankly, I think at the end of this, we're all going to celebrate that it happened, but it's an ugly transition period. And it was at that point we really decided we're going to stick pretty close to our business model. Of course, we're going to dabble in a little bit more stock in certain areas, or certain best sellers, or certain products that just simply are a real challenge to get, or we feel like could make us a few more sales, but we are not going to make wholesale changes to our model. One other factor though for us is we're much more constrained in terms of warehousing than I think a lot of retailers that are built for that stocking model would be. So to a certain degree, we've got some ways to play outside the rules of our model, and then there are other ways where simply we're not willing to negotiate beyond our capacity there.
And I think, and Damien, I want to kind of dovetail this over to a question for you. One of the things that has been a number of questions that people have asked is that, there has been this, inventory grab that went on in the last year. How do you make sure now that you're not overstocked, that you're not, holding on to way too much inventory? Because I know single store operators all the way up to the largest guys, in the country, have been expanding their inventory, expanding their warehouse space, and there's been just a huge push for that. Are there suggestions for the folks listening to this as how to manage this situation right now without overstocking, either overall or just in certain categories?
That's a big question. I'll take a stab at it, and then hopefully the others.
Yeah, there's no right answers here or wrong answers. Just give it a rip.
Yeah. So I think kind of like Carson was saying, middle to last half of or second half of last year, we kind of expected to see the business climate changing this year, right? So there was definitely a period where I think our philosophy was more or less, let's get what we can get from, I mean, without going crazy. We didn't add a ton
Sure.
of vendors that we didn't trust and didn't know, but within the vendors that we work with, we were kind of taking whatever we could, and those that were, able to get us more quickly relative to others, we were taking it. And so we're certainly overbought in a lot of areas and kind of working through that right now. We did make adjustments. We tried to get ahead of it to a certain extent in the second half of last year. But when, some of our vendors were working with year-long plus lead times, those adjustments are slow to come through, right? So in some cases, the adjustments that we were making in September and October of last year, we're not going to see till September, October, November of this year in terms of the rate that we were buying at and things like that. And I think the other challenge when you're working with such long lead times in a dynamically changing environment is, you might be placing orders at one point in time based on a certain rate of sale, and 3 months later, the rate of sale has changed dramatically, either within that product group or that SKU or that vendor or more broadly than that, right? So then you're having to adjust again on what's going out. So I think that's kind of, what we went through in terms of working through it at this point in time. It's, there's certain items that we saw that we were getting really overstocked on. So we more or less stopped buying them at a certain point. And we just literally had to pause in certain areas, knowing that there's uncertainty in the system. But we have the expectation that even if lead times haven't come down already, we know that everyone's overstocked. So we're expecting that lead times are going to be better 3 months from now than they are today. And it's been sort of that trajectory so far this year as they've been starting to come in, right? So there's sort of the expectation game and knowing that, okay, maybe we don't need to order it, but if we wait a few months, we'll probably get it at the same point in time. But we can, free up those dollars and that open to buy for other areas that, we need to prioritize it now. So there's that piece of it. And then there's putting on your merchandising hat and seeing where you're overbought and trying to promote certain items, trying to position it better within your stores and just working through the stock level, making sure that you're pushing out dead inventory and things like that. There's a bunch of different directions you could go with that question, but hopefully that's at least an initial stab at it.
No, they're very very insightful, I think. And I guess one of the things that brought to my mind, and Jonathan, I'll let you kind of tackle this one, is that, so what are we seeing right now as far as, categories that are, that we're seeing shorter lead times on, those areas where product is more available. I mean, help us out here since you deal directly with, manufacturers in a lot of situations here. What are we looking at when it comes to those categories that maybe we could start leaning a little more heavily on than we have in the last number of months?
I don't know. I mean, to be honest, it sort of goes company by company, not so much category by category. I would imagine, and logically speaking, upholstery guys in Mexico probably are going to get you goods because obviously there's a drastic step that you don't have to take, putting something on a container and figuring out the booking. It's amazing because, all of us have one thing in common, and we've all are doing different jobs. And, what we were doing 2 years ago, 3 years ago, I was a furniture sales guy, and now I'm a logistics specialist. And it's changed the way I run my life. I was talking to a customer / friend this morning, and we're like, hey, we're all doing different things now, right? So what was before isn't now, and what is now probably won't be later. So obviously the guys, to answer your question with product, warehouses, local warehouses that are flowing products so that they can parcel them out onesie twosie or do truckloads out of a local warehouse. And those guys have the product, but it's also something where you're competing with every other retailer on the street because you can get it. Wayfair and Amazon obviously play into that, and e-commerce, and they're great multi-channel partners because obviously you don't have to make such a big inventory commitment to it. So it's tough, and I think there's give and take. Some of the things that might take a long time to get are some of the items that are a little bit more unique to you, give you more options where you can, kind of put a little bit of your own sort of sense and style, maybe change marriages on fabric packages, maybe change heights and, bedrooms. I work with CS Flow as well. And, it's all like, hey, we need a lower headboard because in Honolulu, things are lower. All right, well, we can do that. But with that comes a little bit of bespokeness, and that takes a little bit of time. And so I think probably the more the vanilla products, if you want to get a 5-piece dinette set for what used to be $299 is probably $399. Those will probably flow because they're easy.
Carson, what's your thought on that too? What are you seeing as far as the the category or specific areas where products coming from, where you're seeing those lead times shrinking dramatically? Because again, everybody in this call wants to hear about planning, and certainly that's a key piece of it, to know where they can get things more reliably and quickly.
Yeah, I mean, our most important category is mattresses, and we've really seen a near return to normal in the mattress category after a really rough year and a half, and it's our most profitable category. And so, that's been a big win for us. And really, that's a half a dozen, 6 or 7 vendors there that just really are doing exactly what we need to do and making our life easy. Other categories, really even through the pandemic, dining room was pretty easy for us to get. Spotty supply in motion furniture, which is a really important category, probably our second most important category. And now a good quantity of motion product is available in a little bit more predictable manner. We're still really seeing a lot of struggles in bedrooms and import bedrooms in specific, and to a certain degree, stationary upholstery as well is still a struggle for us.
Okay, I appreciate that, and because I think any insight like that's helpful. So let me get to a couple more of the questions here, because we've had quite a few in advances of this. We talked a minute ago, and I'm going to throw this out as kind of a jump ball, if you will. I'm just going to throw this out. Whoever wants to jump in on this. There's a lot of questions here relating to the fact of, okay, I've hoarded, if you will. I've made sure that we got, we had to just get something. We got a lot of extra inventory in. So what have been some successful ways to offload the excess? And I'm just going to throw that out as an open question, whoever wants to jump in.
I'll jump in on this. We've brainstormed a lot of ideas, done some of these, haven't done others, but I feel like there's, for somebody that's aggressive and creative, there's definitely opportunities here. And I'll just kind of run through those real quick. Using a high impact company or liquidator, we've had a really good success with that. We actually have one starting next week. And that was a massive boon for us, even during the pandemic when we couldn't get product. It still produced huge returns, and we topped prior year sales. And I just don't think that should be ignored, I guess. Other ideas that I really like, in specific, moving outside of your traditional model. One is pop-up stores. If there's empty retail locations in markets you aren't maybe serving now, or not serving as well as you'd like, or you want to test to see what the consumer demand is, if you can sign a short-term lease for some of that empty retail space that's being vacated by other industries, office supply stores or clothing stores or whatever, running pop-up shops there for 30, 60, 90 days, maybe in conjunction with one of those liquidators. And then another idea I really love is setting up a distribution model in another market, AKA we don't have to put a store. Let's put a distribution center and let's advertise like heck. If you've got a website, drive the traffic to that website if it's transactional, and then you've got a localized distribution center in that area. And I really feel like there's an opportunity there to do something a little bit different. And then the last idea is, people have used social media and different ways to, try to sell or liquidate product, right? But something I haven't seen anybody do is create an insiders group. And if you're in any Facebook groups, you know that once you're inside of that, you always see those posts or messages. It's different than following a page or something along that line. So if you could provide an incentive to all your current customers and do some Google ads or other ways to bring people in from a lead perspective into that group, then you kind of seed the group with, you know, every Wednesday you sell some items at cost or something just astronomical to create some buzz or word of mouth value, or I'm gonna check in next week no matter what, just to see what it is. And then you fill in the rest of the week with product that you're making margin on, but maybe you're oversupplied on. And we haven't done that, but I really believe there's something possibly to that.
And no, I mean, there's some fantastic ideas there, and I think that, you know, Damien, I'm going to throw this to you, because part of my thought in that conversation is that there's so many questions that came in about this, you know, offloading excess inventory and things of that sort, because in order to plan properly for inventory levels, you know, you've got to have a flow going out the door. This is not just all about what's coming in through the incoming dock. It's about what's going on in the delivery trucks. So would you talk a little bit about thoughts there, as far as and what you guys have done with maybe some categories you've had a glut on, and how that's not only been, you know, obviously it can be a sales driver like Carson's talking about, but also how it can really help you with overall the flow of merchandise through your system.
Yeah, there's a couple things that we've done. One is, you know, partnering with some of our suppliers to get promotions in place. So that is kind of, you know, the promoting option. You know, if for whatever reason we partnered closely with them to really ramp up and it didn't pan out as much as we had hoped, then in certain categories they've been willing to work with us to kind of move some of it so that we can continue to buy from them and shift to where the new demand is. So that's one kind of route that we've gone, and just having that partnership conversation with them. Sort of like Carson said, one of the things that we are going to try, we've just kind of talked about recently, is leveraging our clearance center even for prime inventory if it's overstocked. Over the last couple of years, you know, our clearance center has been a good channel for us to move, you know, NAS inventory or dead inventory and things like this. But there's a certain customer that, as a result, has, you know, come to shop there, and they know when we're going to bring a transfer in, and they know when we're going to bring new product. So one of the ideas that we had is, well, could we use that channel to move some of our overstock items that typically we wouldn't put in the clearance center, but we can, you know, discount it enough that it's attractive to that customer, and at least get an okay margin on it and move it so that we can free up those dollars for, you know, other inventory. So those are a couple of the things that we've been doing or been talking about. I know that's not really specific to any one category, but yeah.
No, but I mean, I think it brings up a great point. You're both talking about the fact that as you're sitting there looking at your flow of inventory levels, and everything like this, you know, you've got to have, you want to have like an even flow going out the door and coming in the door. And so I love the fact that you guys are both, in different ways, being super creative when it comes to how to move chunks of inventory that you have a lot of, which just makes sense, because there's again, so many of the questions here are about that. So I know this is something that a lot of people are facing. Here's another question, because under the biggest category of questions that came in were formulas, and I know that people want to, you know, everybody wants to know what's one of those magic bullets, et cetera. And Jonathan, I'll start with you, but we can go around to everybody in this one. Is there a normal percentage of stock inventory that a furniture operation should hold? That's the question here. Now, that's, I know, a generic overview number. We're not talking about specific categories, but is there any more, even a base percentage of what somebody should have, or can they, if they go out and look at their warehouse tomorrow, that they can see if they're within parameters?
Crazy, because I mean, I remember back in the old days when I sort of started, when there were warehouses that were filled with product, you'd be crazy to buy a container unless you couldn't get rid of it in 45 days, right? Because why carry the cost? You know, these guys could probably speak to that obviously more, because they're in tune with every sort of KPI they've got in their businesses. But man, I mean, I would still look at working that GMROI situation and figuring out what I can do, what I'm in control of, because one thing that we've all learned is we're not in control of a whole lot in this business, and we're sort of at the mercy of the, you know, of the wind. What we can't control, and I saw a lot of those questions, is, you know, what's happening within our own four walls, and what can we control? And the things that we can't control are our processes the way we interact with our people, the experience that we offer our customers and our employees, because now the employees have a seat at the table, right? I mean, we want the best employees to not only, stick around, but we want them to stick around and want to stick around and be happy, because that's our army. You can buy all the best weapons in the world, but if you don't have skilled people to operate it, then you're kind of floating. And this is not a transactional business, and it's funny, as I read all the stuff that comes out for a lot of different industries, we are somewhat unique in the fact that we are in the people business, right? So if you're a furniture store with salespeople in it, you're going to look at your business one way. But if you're a sales organization with furniture in it, then you're going to look at your business a different way. And so if you're on the transactional side, it's just a different monster. I don't know how you do it, because there's too much out of your control. You just hope that somebody comes in and buys something, and that you hope that you can deliver it, and you hope that that delivery actually sticks.
Yet, Carson, as I look at these questions, it's what inventory level do I need? How do I estimate my inventory level? Everybody's kind of stuck on that. Is that the wrong way to approach it, or what is your sense?
No, I don't think it's the wrong way to approach it, but I would just offer a slightly different way to consider that. So yes, we keep track of inventory to sales, GMROI, inventory turns, and we've got our targets. They would certainly be much different than Damien, I'm sure, in terms of what that actual target is. But for me, the focus is on making sure that our KPIs that are directly related to profitability and cash, that's what I'm trying to protect. And I see some retailers, I think, that they're worried about losing a sale because they see traffic go down, or they think a competitor has more, or they're tired of fighting this extended lead time game, and they forget about that, and that's where they end up over inventoried. And if you're in a fast demand drop period, the one thing you don't want to be is short on cash. And then from a profitability standpoint, we've had our financials hit really, really hard earlier this year with some of the price increases. And it didn't take very long where that became the most important metric. If we have to sacrifice a little bit of volume to make sure and stay within our parameters for profitability and cash flow, then that's what we'll do. But we've gone back to the sales team and said, we need to double our effort. People are not coming in the door. And so we were up 20% in June and had our best delivery month in our history. So you can play both games. And I think right now with inflation and demand changes, you have to.
Interesting, because you're saying, we've done many conversations on these webinars about the attention to cash flow, something that the COVID really caused a lot of people to do if they hadn't been in the past. And so you're starting there and building everything from there versus the other way around, which I think is interesting. Damien, any thoughts on what Carson just said?
Yeah, I was just going to chime in a little bit with, I guess, maybe a different take on the specific question that was asked, which is, okay, what is the optimal inventory level? In an ideal world, the optimal inventory level, at least from my perspective, is Carson's inventory level, which is 0 or 1, right? Or to know that I'm never going to hold it, but I'm going to cross dock it and deliver it and have 0 in my warehouse, right? Because then you don't tie up any cash. You don't have to deal with a whole bunch of issues related to carrying inventory, right? So we don't live in an ideal world though, right? So the question then becomes, as you look at your business and the vendors you carry and the customers that you serve, how much uncertainty is there? How much variability is there in lead times? And what kind of minimum order quantities do you have to work with the vendors that you work with? What are the lead times that you have from them in an uncertain world or a normal world? And then from there, making the business decision to figure out, okay, how much do I want to hold based on all of those factors, right? So if you do primarily special order business, you probably don't really have to hold much inventory because you're special ordering everything, right? Mm-hmm. So that's a great business to be in because you don't have the inventory holding costs. If you're serving a customer segment that wants something right away and they don't want to wait 6 to 9 months and they're maybe not working with a designer, but they're just mid-market, then maybe you need to have a higher level of inventory so that you can absorb fluctuations and uncertainty in the supply chain to be able to serve them. Or for us, you know, being on an island in the middle of the sea, we're not going to get anything in less than about a month. And it's always going to be more than that because of shipping times and things like that. But even if we're pulling from a warehouse in California. So you kind of have to take into consideration all of those factors to come up with the optimal level for your business. In the perfect world, you know, it's zero, but that doesn't give you a lot of cushion to work with in times of uncertainty. And for certain customer segments, that might not work. For certain vendors, that might not work if you don't have a warehouse that you can pull from and not have to stock it yourself. So there's a lot of pieces that go into answering that question that are very specific to anyone's specific business, I think.
Well, and it's, you know, and let's say that, you know, everybody would love to have a formula, but you're saying that formula is just definitively different for every particular business, because every retailer in our space, in our sector, is just absolutely their own entity, because everything is different. There's nothing that's really the same. So no, I think it's a great answer. And you know,
Mark, can I add something really fast?
Go, yeah, no, you don't have to do it really fast. Go for it.
Well, I just, you know, we're talking a lot of generalities, and I think sometimes when I sit on these webinars, I get frustrated that somebody won't just throw out a number, even if it's not perfect for me. Like, am I even in the
everybody
ballpark?
wants the number. I got you.
Well,
No.
and so, you know, I just want to say, like, you know, I think the last time I looked, the average sales to inventory was about 20, something like that in the furniture industry. Our target has always been about 10. We'll dip below that occasionally. There's no question, though, we've lived in the 12 to 18% range as these things fluctuate. So again, my model may not be what some of you out there are, but I want to make sure and give somebody some starting point if they don't follow these metrics all the time.
Jonathan, anything to add to that?
I guess the only thing I'd say is that, you know, I think price increases are coming, right? And they're probably going to keep on coming as this supply side thing continues to be a three-headed monster. The inventory that you have now is inexpensive, comparatively speaking. So you've got a value there, right? I mean, there's sort of a silver lining to this whole thing, is that you're going to be able to, once these price increases come up, you change your retails. If you do, you'll be able to make more margin with it.
So in our last few minutes here, and I'm gonna jump on Carson's bandwagon here. All right, I'm gonna honor what you just said. So let's do this. Since we've had so many questions here and people looking for formulas and approaches, so let's just walk through this one by one here briefly. So, Damien, you kind of started this, and I'm gonna start with Carson on this one. So Carson, you're not your company, but you're a retailer out there that's a home furnishing retailer. What are those? You know, walk us through it. You want to really maximize your inventory levels and really help to try to forecast demand. What are the 3 or 4 things that you've got to do? And give me that run, that order. What are we talking about?
Well, I think on the demand side, you know, and even in looking at all these complicated models, I still prefer just a simple rolling average, but using your brain and not just plugging the number in. I think that's probably the simplest part. We balance that out against again that sales to inventory number, because you need to stay profitable with that. Inventory turns and GMROI, I think, were mentioned by Jonathan, and I think if you're not actively monitoring that and trying to drive that number up, I think you're missing out on an opportunity. And so those would be probably the fast, easy ones based off of that. In terms of merchandising sales velocity, we rate our product on gross margin dollars per square foot, but we calculate it out to a retail margin at 50%. That's probably too much to dive into right now, but that's kind of the standard metric we use, and we use about 120-day time period. The reason for that is that helps to level the playing field between low margin, low priced items that sell at a very high volume versus high margin, you know, big dollars that sell much slower. And then it helps to also modulate things like sale prices, clearance, discounts that you may be giving. And it really levels the playing field in terms of how much money am I making on that 10 by 10 area that display is taken up in the store.
Awesome start. Damien, what's your thought on that? Help somebody out there. So you're just, how do you approach it from start to finish there? Maybe the metrics you use, whatever it might be. What does that look like?
Yeah, I mean, we look at gross margin return on inventory, or GM ROI also. Um, we we monitor days of inventory pretty closely, so that's one of the metrics that our merchandising team is responsible for. Um, and so, you know, you can look at it in terms of dollars or days or whatever it may be. There's a lot of different ways to look at it. We like reporting on it and looking at it that way, because it kind of helps you understand like uh, the timeline aspect of it, I guess you could say, right? So we actually look at how many days of inventory we have versus our rate of sale versus all of our outstanding POs, and we can project out what our open to buy or what our buying budget is going to be 3 months from now, 6 months, or 9 months from now, depending on how many POs we have in the system. So that's kind of the way that we're approaching it. And based on that, if you can see that we're going to be overbought for the next 3 months or 6 months, okay, we need to think about any new orders that we're placing being out ahead of that. And then any deviations from that, we're going to have to make on a case-by-case basis, depending on the category and whether it's like a priority item or things like that. So that's kind of the way that we're trying to get ahead of it. But like you said, as the rate of sale changes, there's some assumptions that you have to make, you're going to have to make to tweak that. So I think the question anyone should ask themselves is, for my business, am I going to be opening new stores? Am I not going to be opening new stores? Am I going to be adding new categories or new lines or things like that? How is that going to change our rate of sale? And how does that reflect what I expect to happen in the macro environment? And then you can kind of tweak your forecast or your projection based on that.
Yeah, I love both those responses, because we're just trying to get inside both of your heads a little bit as far as what that thought pattern is. I think that was very super instructive, and I appreciated Carson saying, you know, that we sometimes you want those specific details and people kind of dance around a little bit, but you guys did a great job on that.
Can
And
I
I
just
just
throw
have one,
something in real fast also?
yeah, I'm
You
just
know,
gonna
back
give you
in, okay. I'm glad I spoke up. My last couple my last months or years of retail was back in '09, and things were pretty dicey back then as well. And we were, you know, having a lot of the same issues, because back then the just-in-time delivery was kind of starting to wane, and we would have to start filling our warehouses with things. And so we started looking at a different metric, which was gross margin dollars per delivery, as far as what we were going to buy and put in our warehouse. Because to Carson's point, if you ain't making any money, what are you doing here, right? So let's go capitalize on the things that we can make the most money on. You can't deposit a percentage, but you can deposit dollars. And if we can find those things that are actually returning cash to us at a better clip, then those are the things that we were going to invest in. And then we got really good at promoting those items and adding a lot of value to that, so that we can kind of, you know, at least have a battle plan going into war, because it was pretty ugly. The banks were in horrible shape then too, which is a big difference than what's going on now. And who knew what was going to happen, right? So that was a good stat to take a look at as well, as far as specifics go.
well, I think that there's been a ton of takeaways here, and the few that I just want to highlight really quickly is that you know, technology is great, but I hear you guys also saying that you've got to go with what's in front of you, with the numbers that you have for your business. And Carson, you even said, you know, go with your gut too. You got to really kind of get a feel for a lot of what's happening. I think that's great, and I love the fact that at the very beginning of this webinar we talked about the fact that there's power on your sales floor when it comes to really helping you manage your inventory levels, because of having a sales team that's going to make sure that they are working to sell what you have, can manage the expectations of the customers even better. And also in the case of CS Woe and Sons, they work together to make sure that if somebody's got an order on a PO that's a ways out, that they can maybe swap with somebody else and meet a customer's need more immediately. I mean, I thought that was just brilliant. So I appreciate that very, very much. And I want to bring up our closing slide here before I thank you guys. But just as a couple of reminders here, you know, we have other resources to help you with the operations of your stores. It's go.myhfa.org/operations. Great place to go for all of that kind of information. And remember that these webinars are on demand at myhfa.org/webinar. I want to thank you all for joining us. Let me just kind of remind everybody who we had here. Damian Farrago from CS Wowen Sons in Hawaii. Just really appreciate your insights today very, very much. Really enjoyed it a great deal. Carson Rao, Home Trends in Nebraska. Carson, I'll tell you, you guys both have very different business models, but I think together there's so many great takeaways for anybody who's in business in our space. And Jonathan Schulman, IFRA president, rep, a lot of experience. You brought to a really great perspective this as well. So I appreciate that. And for all of you joining us, I always like to leave you with two things. One, I wish you great sales. Two, I wish you great health. I'm Mark Schumacher, the CEO of HFA. On behalf of everybody here, I want to thank you for joining us, and we will see you next time.